Hi everybody, this is Gary Dean and this is our nightly video report for Monday, July 25th, 2016. So today we saw the Dow that was red. I think the Qs ended green, which is a shocker just because you have the downgrade on Apple today, but it really what's happening is you have dumb money that's coming into the market right now. And what I mean by dumb money, these are your money managers, your fund managers that have underperformed the major indexes for quite some time, or let's just say the S&P 500. So what do is, they missed this move because they were probably short. And now what happens is they're saying, okay, we're not, this is at all-time highs already, so I don't want to chase up here. And what happens is they start chasing the indexes that have not made new highs, which is the Qs and IWM, or the small caps, which I think this was green today by 1%. And IWM was down like 14 cents. So you have dumb money now chasing this market. You have a fractured market where you have the Dow minus 80 as the Qs are green and IWM is barely red, and the S&P that's down 8 points. So we have a fractured market where they're not running in unity. And on top of that, we also have we had volatility. Short-term volatility today was down the most out of all the indexes, out of everything. So when you start seeing the Dow minus 77 or 80, whatever it closed at today, and short-term volatility, you're seeing down more than that. What's leading up to, and again, I don't know the exact time period it happens, but we get a volatility shocker. And what it means is that nobody is protected in the market if for any kind of downside action. And then what happens is, there's been such low volume, and a majority of the points to get up here have been when the cash markets are closed. When nobody's protected with volatility and we start going down, there's a chance we can see this entire move wiped out in a day, maybe a day and a half, and we've seen it before. That's why I'm saying when they ignore volatility and they ignore any kind of protection, when things roll over, they crash. And I believe these lows are going to get taken out in a very, very fast manner. And I wouldn't be surprised to see us coming down and testing these lows before everything is said and done. But we need that, we need the market to move lower. It has not yet, but there's still all of these, well, we're down a little bit today, but there's these warning signs that nobody is paying attention to at all. Nobody thinks this market will ever go down. Nobody really knows why it's going up, though. It's just going up, and everybody feels like they have to jump on the train because it's leaving. And like I've said, we've seen this over and over where everyone jumps on. They don't realize they're jumping on right before the market's going to go off of a cliff. And it is the same song and dance. And the way that this ends is the indexes going in separate directions, the dumb money chasing the indexes that have not made new all-time highs or new highs, so they start piling in on the underperforming indexes. And they ignore short-term volatility or any kind of protection in the market. And it all bubbles up and leads into a bottleneck on the way out, and then people just start throwing market orders out. And, I kind of believe that's where the flash crash, why it happened, because we had the same exact thing that went on there during that time period. But each and every other time that we've had where this market has crashed, in a crash, I'm saying more than 220 points on the S&P. But every time we've seen it end exactly this way. So when we turn around and you're going to see the S&P down 100 or 200 in a matter of a couple days, everyone's going to start wondering how nobody saw this coming. And everybody saw it coming. It's one of those things that everybody's just ignoring what these warning signs are, and it seems to lead in tears every single time, or it has every time in the past. So Nothing really to add here. We have bearish divergences on the daily as well as being very overbought here. If we look at the 60-minute chart, we're still trading within this reverse symmetrical triangle, and it's one of the reasons why I think we're coming down and testing or even breaking these lows here is because of this trend line, and where this pattern, the next move it's coming to is going to be all the way down here. And the way that these work, like I said, they get down to this level in a very, very fast manner. So this only took from 627 to get all the way at 727 or 720. So less than a month to go from this level to this level. It's probably going to take less than a week to get down to this level, but it's just a matter of when it starts. So we have the bearish divergences, warning sign. We have very overbought conditions, warning sign. You have the indexes that are running through, running against each other is probably the best thing to do it, and you have the dumb money that's piling into the underperforming indexes. And like I said, I don't know exactly when this move starts. It's going to start, and I can pretty much assure you nobody's going to be ready for it, and everybody's going to be shocked, and that's what I call this volatility shocker. That's going to be happening, and it could happen any day and make 100% sense. So that is really it. I mean, if we look even on a 15-minute chart, they still refuse to come down and recycle fully to the downside. They get a little bit below the mid-wet level here and then turn back up. And it's just, everybody's looking at it where we're consolidating and waiting for the next move up. And when we start breaking down, again, nobody is prepared for it. So, just a 23% retracement brings you down to 2132. It's more likely that this short-term one is coming down to 2105 or 2083, maybe a bounce, but I still believe this entire rally will be given back in less than a 7-day time period before everybody realizes that this market's not going back up again. So with that, let's see what plays out tomorrow. Today's kind of boring, and have a great night.